Last week, something absolutely incredible happened in financial markets. The Federal Reserve decided to cut interest rates by 50 basis points, something that many investors were not expecting. Following this, we immediately saw gold breaking out to new all-time highs, as investors are seeing this rate cut as an indication of future inflation or currency debasement. The S&P 500 also broke out to new all-time highs following the Federal Reserve's decision, but interestingly, Bitcoin has been unable to keep up with the S&P 500 and gold's breakout. It's been trending down consistently since March of 2024, still about 15% below its previous all-time high. Now, that's a little bit strange because most of the time when the S&P 500 is climbing higher, you also tend to see Bitcoin climbing higher. Since March of 2024, we've seen the S&P 500 making new all-time highs and Bitcoin consistently trending lower. But this isn't the first time that we've seen the type of divergence between the stock market and Bitcoin. We've seen this multiple times over the last 5 years. Sometimes Bitcoin ends up catching up to the S&P 500, and sometimes the S&P 500 ends up catching down to Bitcoin. In today's video, I'm going to show you which one is the most likely to occur and what trade we just recommended on Bitcoin to our clients on our website. In order to do that, we have to look at one of the most important drivers of financial markets, the US dollar. There's something called the US dollar index, the Bitcion, and it shows us the strength of the US dollar relative to other major global currencies. It has a massive impact on financial markets, including Bitcoin. This is what the US dollar index looks like, and I want you to focus on all the moments where the US dollar index saw a big decline. Look at what happened to Bitcoin in all of these instances. It saw a massive move up in price during and following these US dollar weakenings. Now, this is not just a random correlation that I'm showing to you. There's a very good reason for why this happens. A weak US dollar directly increases foreign demand for Bitcoin. Let's say Bitcoin is priced at $60,000 on all the popular crypto exchanges, but all of a sudden the US dollar weakens by 5% relative to the Indian rupee. That same $60,000 Bitcoin that's listed on crypto exchanges becomes 5% more affordable for Indian investors to buy. And so that can push a significant number of Indian investors to allocate capital into Bitcoin, potentially pushing the price up exponentially. Now, when the US dollar index, the Bitcion, falls, it's not just relative to the Indian rupee, it's against all major global currencies. So when the US dollar is weakening, Bitcoin becomes cheaper for the rest of the world, and so naturally leads to a higher level of foreign investment into this asset class. Now, you can see more recently we've had a little bit of a weakening in the US dollar. If we zoom in a little bit and we add US interest rates on top of this chart, we see the US dollar is being directly driven by the level of interest rates in the United States right now, which are currently being driven down by the fact that the Federal Reserve is cutting interest rates, as we mentioned at the beginning of the video. If the Federal Reserve continues to cut interest rates, which is what they've said they're going to do, that's probably going to continue leading the US dollar lower. Now, again, despite the fact that the US dollar is weakening right now, Bitcoin is continuing to move down. So maybe something else is at play right now. When we look at our valuation model for Bitcoin, it's telling us that Bitcoin should be up around 100% over the last 6 months. And when we look at the actual performance of Bitcoin, it's about flat. This is a valuation model that uses the US dollar and the S&P 500 to give us an idea of where Bitcoin should be. And right now it's telling us that Bitcoin is undervalued by around 50%. Now, it's not the first time that Bitcoin has been undervalued according to our model. It happened in January of last year, in September of 2020, and in January of 2019. That was here, and here on Bitcoin's price chart. All of these were fantastic buying opportunities for Bitcoin. By the way, we share this Bitcoin valuation model for free on our newsletter every month. So sign up to our newsletter if you want to get monthly updates on this model. So Bitcoin's current undervaluation is one of the key reasons why we sent out a buy alert to our clients for Bitcoin on our website. This is a chart that shows Bitcoin's typical seasonal trends. Now, you can see between about May and September, Bitcoin usually trends lower and only really begins to trend higher starting in October, heading into the end of the year. It could be there's a little bit more volatility left over the next few weeks, but we're generally quite optimistic on Bitcoin heading into the end of 2024. Now, I want to be clear, we don't expect a massive bull run to occur right now on Bitcoin, but a push higher past the all-time high could be quite a successful trade for us. These are exactly the types of trades that we take you step by step through on our website. We've had many incredibly successful trades on cryptocurrencies yielding 30, 50, 80% returns, and our very strict risk management allows us to keep our losses very small despite the wild volatility that we have on crypto. We take you through all of these trades step by step, from the buy alert to the profit taking to the closure. You can check out all our closed trades at gameoftrades.net and grab yourself a subscription. You will not regret it.